Welcome to the Midweek Market Update, where I do a technical analysis and give you my thoughts on SPY the Qs and IWM. After that, we will take a brief tour through our core list of companies, and if you stick with me towards the end of the video, I've got 3 additional trade ideas to share with you, so definitely stay tuned for that. Let's kick off the S&P analysis as we always do with our sectors: who was leading, who was losing, and where was the weight. The energy sector led the pack today, up 4.15%, whereas the XLRE was down at the bottom of the barrel, but still up quite considerably, up 1.18%. As we know, the FOMC meeting was today, and everything ended up in the green after the quote-unquote pump from Jerome Powell. We'll get into that in just a moment, but for now, let's identify those heavy-weighted sectors. So as we know, the XLK is the heaviest of them all, up at the top of our list, up 3.51%. The XLF for financial, second heaviest weight that we're watching, up 3.06%. And then the XLV for healthcare is down here, skewed towards the bottom, but again, a pretty impressive gain on today's session, up 2.22%. Let's run through all of our sector charts again as we are sort of at this juncture in the marketplace. It's worth noting the structure here, and we will of course check in on the ratios. Energy is back above this breakout point here. Again, slightly concerning if this is going to be a more meaningful breakout in the S&P 500, or I shouldn't say breakout, but rather just reversal off of these lows. Energy should not be one of the names that's leading the charge to the upside. So this is a slightly concerning look, remembering that XLE for energy is a more defensive and risk-off asset. Of course, the XLK is perking up off of its lows as well. Remember that we had support and support here as well. The main takeaway from this chart from a structural standpoint is that if this is going to act as a double bottom, notice that on today's session we did actually break above that neckline with a solid daily close. So this is looking like it's improving. The question, of course, just becomes how much can it improve? And in the grand scheme of things, can we get back to the top of this overall range here, closer to that 164? So this is a very decent look for a reversal in the technology sector, but you do want to keep tabs on it and essentially make sure at this point in time we don't fall back down underneath this zone. It is kind of going to be treated more as a zone going forward. So, last line of defense, you essentially want to see the XLK above 146.60. So decent look of improvement here in tech. Let's continue along and talk about the XLC. This is where I have some concerns still, just because we are still underneath this prior shelf of support. So as we know, this could turn into simply a break retest, lower high, big lower high, right from here to here to here. That still is on the table and posing a bit of a threat for our S&P 500. So monitor 64 as your level here in the XLC. Critical one to watch going forward. If it does give us the lower high scenario, obviously that's not a good look for your S&P 500 finding that more meaningful bottom. XLB for the materials sector sort of perking up obviously with the rest of the market as well. As we know, essentially as long as it's playing nicely in this overall box here, no big concerns, really lightweight sector. XLF for financials. Let's dive into this one a little bit. Nice hammer reversal here off of the lows, and we're actually above sort of this flush point and the prior low from in here as of the close on today's session, above 35.50. So this as well is looking like a more solid improvement for a reversal. We just have to be mindful that, we can clearly still form a lower high, right? So at minimum here, I do want to see this come up to this 38 level. That's a lot to ask out of financials, I believe, as of right now, considering the trend is down, but I am looking for that equal high in here before I start to become more confident in a bottom in the S&P 500. Obviously, the risk is just your continued lower highs. There we go. That's a tongue twister. And there's potentially resistance here around that 36.50, this prior area of support, which broke down, obviously. So that's your risk here in the XLF. Again, a good sign of improvement, getting back above this breakdown point from here, but still has a long way to go before I'm feeling much more confident in a potential bottom for our S&P 500. While we're talking about financial things, let's quickly deviate away from the sectors and talk about the TNX. Of course, this is our 10-year note. And what do we see here? Just a little bit of a pullback on today's session, but I really wanted to pit stop here so we could talk about the Fed, the big bad Fed, right? So obviously, we did get that 0.5 50 basis points, right? 0.5% interest rate hike. And that is the expectation for the next 2 meetings. Jerome Powell did come out and clearly say that 0.75 hikes are not going to be considered, at least as of right now. Obviously, everything is always subject to change in the marketplace, but the market really liked the fact that this is apparently off the table for the next 2 meetings. So that was a decent thing to hear, and they are going to move forward as planned with the runoff of the balance sheet. I believe it starts at $30 billion per month, and then it will increase to $60 billion after 3 months, and then $90 billion after another 3 months of the 60. If I got that order wrong here, or the duration of the months, feel free to let me know in the comment section. But nonetheless, at the end of the day, Jerome Powell gave the market exactly what the market wanted to hear on today's session, and we clearly rallied based on that information. So going forward, let's see how the Fed continues to maintain its stance. They are looking for inflation to have quote unquote peaked in what was it, March and April. We'll see if we get continued markers that would support that sort of claim. And again, I'm not here to argue whether or not they should be more aggressive, combat inflation, yes or no. We just know the market really liked what it heard today, and obviously it did lead to that rally. So that's what we've got in our TNX. Let's jump back on over to the sectors and round them out. We've got the XLY for consumer discretionary, very similar look to our XLK, clearly bouncing off of this level of support right here as well. I like that it didn't really make a new significant lower low. If this is just going to play ping pong in the range and make its way back up towards the top, obviously that does check out as being a positive force for our S&P 500 en masse. Next up, we have XLI for industrials. Really nothing to say about this chart. Really lightweight sector, right back towards the midpoint of the range, bouncing off of the bottom here. Good look. It did not break down and continue to put downward pressure. Again, such a lightweight sector. As long as it remains in this box, fine. No big deal for our S&P 500. XLP right at the back test of the neckline from the head and shoulders, as we know. That was the play right there. We talked about it in the weekly watch this video on Sunday. Nonetheless, we're back testing that breakdown point. So critical question here is, do we roll over for a lower high? And if so, I would say that that's actually a good thing for our S&P 500, noting that we're still not, making dramatic new lower lows underneath here, but this again being a more defensive sector does not want to be leading the charge to the upside, which is why I'm much more concerned with energy breaking back out than our little rally here in the XLP. So looks pretty good as of right now. The big question again is, do we just roll over here and play nicely around this 78 to 76 range, find some balance in this area? That would be a good thing for your XLP and probably start to become more of a risk on signal for your S&P 500 overall. Continuing along, we have utilities. This one, of course, got absolutely demolished, falling out of the bull flag from up here, but starting to find a little bit of a balance in this area of the chart. Again, this is a good thing. We wanted to see these defensive sectors pull back. We did not want to see them crashing down to new all-time lows. So I like the fact that it is finding a bit of a footing here around the 71 handle. Strikes me as a good thing for the S&P 500. Next up, we have the XLV, third heaviest weighted sector that we're usually watching. And again, at a pretty critical point, I would say, just because it was the prior double bottom neckline from right around in here. You'll notice that the daily close is above the flush point, which was slightly underneath, closer to that 131.50-ish level right around in here. So that is an improvement, but ultimately, until we can get more of a higher low scenario, so something that does potentially this above 133.33, again, I'm not overly convinced that this is automatically just going to go back up to highs and be a big driving factor for upside in our S&P 500. So XLV has some showing improving that it could do here, but the daily bar look, certainly, don't get me wrong, across all sectors right now is, of course, bullish. Last but not least, we have the real estate sector, XLRE. You can see finding a bit of a footing as well, closer to the bottom end of the range. If we were to just do something like this, you could even subdivide it and call something around 45 coming from support. Support, it is finding a bit of a footing there. Again, we don't want to see these risk-off sectors crashing, but we did want to see them off of their highs, and real estate is certainly cooperating as of right now. So I like what we're seeing across our sectors. It looks like things are starting to improve just a little bit. I do want to be mindful, though. Remember what we talked about on the weekly watch list video on Sunday, right? Because everything was red as measured from the prior day's close, as well as the day's open. As we headed into Monday, we were of the expectation that things were a little bit oversold. Well, it works in both directions, right? Don't let it fool you. Just because we have everything green does not mean that it's just going to continue green. There could be some rotation, some selling off in some of these sectors as we move into the remainder of the week. And that would, of course, sort of support the theory that this is nothing more than just a bit of a dead cat bounce. So be mindful that chasing things as of right now could be dangerous to the upside. For the more constructive longs to start panning out, we would want to see some more improvement with higher lows in the XLK, for example. Just to sort of bring this to a real life example, it would be something like this. Okay, fine. If we can put in the higher low here, that becomes more attractive for the reversal, not necessarily just chasing it on the first day of break above that double bottom neckline that we just referred to. Remember, everything is technically overbought as of the close on today's session. Let's see if ultimately things want to cool off, get some acceptance higher, or we're going to roll back over and this was nothing but a little bit of a dead cat bounce. That's my main concern, seeing everything so green here. Quickly checking in on the ratio charts. What do we see here? certainly some improvement in that XLK. And obviously, we know it's sort of supporting at that double bottom. That's a good thing here. Let's ultimately see if we can turn the trend of the yellow line, which is the 50 SMA. So this is starting to strike me as a positive development for the marketplace. We ultimately want to see more acceptance above the yellow line. XLV pulling back into our 50 SMA, but it is still upward sloping quite clearly. So that's sort of more of a neutral indication, maybe slightly bullish, slightly neutral. The XLY is really kind of a concern here, remembering again that it fell out of its sideways ratio sort of look here. Again, you want to see this perk back up and potentially start to flatten out the 50 SMA or make it turn higher. And then XLF, certainly finding a bit of a double bottom in the ratio, needs to do some improvement, right? As we talked about on the actual sector chart as well when we were looking at the structure there. In terms of our risk off sectors down here at the bottom, are any of them starting to deteriorate? Yes, actually the XLP is starting to pull in off of those highs, which is a good look. But again, it's still so far above an upward sloping 50 SMA that I wouldn't quite be ready to consider this a huge sort of win for the XLP dialing back a little bit. Obviously, energy still sitting up at those highs. Real estate, again, getting into that 50 SMA. That's a better look. And the same thing with utilities coming into the 50 SMA. Obviously, after such a sideways period of time, there's potential that this finds another footing and moves higher. But ultimately, if this can do more sideways, if it can flip that moving average sideways, that would be a good constructive look for the risk off sectors, kind of dialing it back just a little bit. Before we jump into our market internals, I do want to take a quick look at our VIX. And then actually, obviously, we'll get to the SPY chart itself. That's the whole gist. What we were talking about in the weekly watch list video with volatility was the fact that the market made a new lower low on that Friday session, right? But obviously, the VIX did not make a new higher high there. So we can see that that was sort of confirmed by the rollover in the VIX and then also the market sort of rallying off of those oversold conditions. I just want to bring this up as a reminder to say, even though we saw a big significant rally based on the FOMC today, we are still far above that 2050 sort of floor, if you will. And if we take a quick look at the VVIX, we are back down underneath that 120 sort of significant zone, that sort of precursor zone. So I would say, volatility has the potential to return back down underneath that 2050, but until it actually does, I would still be very careful about being all willy-nilly about new longs in the marketplace is what I'm getting at. Let's get on over to the SPY chart itself, then we'll get into the market internals, market profile, all that good stuff. A lot of lines on the chart, but don't get me wrong, they all have a purpose, specifically in the short term. This has been a pretty nasty box to be trading in. You'll notice it was up, it was down, it was up, it was down. Now it's been straight up for the past 3 days, but we are sitting at the edge of the weekly expected move as well as significant prior interaction points. So we had support, we had resistance, and now it's also resistance in here. We'll also remember from the weekly watch list video that anything that remains in this box essentially is nothing more than bear flag consolidation in the grand scheme of things. Again, noting that everything was green on today's session, I wouldn't be surprised if we pull back off of the top end of the weekly expected move and just off of this resistance, right? So this 2875 should be carried forward as a significant resistance. What we have underneath us, though, is also very important if the market's going to make a turn here for an upside move. So let's drop it down to a 30-minute time frame, and I'll walk through some of these levels. This one we had mapped out from the weekly watch list video. That's going to be 422.50. If we pull back and form a higher low there, great. There's potential that in the grand scheme of things, this builds out as an inverted head and shoulders. We break the top of the bear flag and get into the daily resistance trend line. That could be a bullish look into the remainder of the week. We would watch for consolidation, ideally above 422.50. Now, 420 might not seem as obvious on this particular chart, but we obviously had a spike into the afternoon here with the FOMC. Basically, in market profile terminology, that would be an area of poor structure. So if we do not support at 422.50, the true line in the sand's got to be 420. Anything that does this keeps the inverted head and shoulders in play, and if we crack 420, start getting acceptance underneath, then this spike essentially just lured in a bunch of longs with absolutely poor trade location, and we're likely headed back down to the bottom end of the pattern here, closer to that 405. So that's what we've got in terms of, intermediate levels. And again, it might look overwhelming here on the daily, but hopefully through walking through the importance and significance of those two levels, it makes a little bit more sense now. Obviously, to the upside, if there is some sort of continuation, which isn't completely off the table, I would just be a little bit more skeptical of that type of move. 437 and your daily resistance trendline, daily 50 SMA are all sort of starting to tie in for a super resistance, again, around 437 if it happens into the remainder of this week. To the downside, we talked about a failure to hold these levels, obviously looking for the rotation lower. 410.64 coming from the invasion day lows could be in play before you get ultimately to the bottom of the pattern at 405. Let's move on over to our market internals now. So let's get that screen pulled up. Here we go. And again, I want to walk you through my concerns of the market sort of closing on a huge bang today with all of the rally that was going on from the FOMC. So I believe I have to, yeah, here we go. I'm just going to grab some more time here so I can show you an example. So obviously with our breaths, we did see significant inflows to the market reading up and over that 300 million mark, kind of an anomaly day when you have a FOMC meeting and everything goes to plan. Obviously, you're going to get big volume, big volatility on that movement. So I would chalk this up to, yeah, it's significant, but it would have been more significant if it happened without the sort of catalyst of the FOMC, right? If it was just natural market buying activity, not necessarily spurred on by a particular conference. The same thing happens here with the advanced decliners. Notice how we're up here at that plus 2,000 mark. This is where my concern really steps in. We'll talk about that in just a second. My one, and again, maybe this isn't just my one concern, but another concerning look here is the fact that the actual tick itself across the entire NYSE, even though we had this, massive rally into the close here, look at what the tick did, right? It barely was scratching at 2,000 to the upside on the cumulative build down below, which, pales in comparison to all of the down days that we've seen earlier on in the week and late last week. So to me, the fact that the cumulative tick wasn't also sort of playing nicely in the direction that we saw, sure, you could chalk it up to volatility, but I would think that this would have wanted to be a little bit more positive for a more meaningful impact of the rally that we saw in the afternoon. Anyways, bringing it back to my first and primary concern that I was mentioning about the advanced decline line. If we do something like this and look for the last instance where we sort of closed on a pretty big imbalance to the buy side up there at the positive, notice the very following day, advanced decliners are in the gutter, right? So if I scrunch this chart up, that's going to correlate to this day right here. Let me actually just zoom in on these two. So here we go, big rally into the close, right? Our advanced decliners, everything's correlated to the upside. The very following day, nasty move to the downside, okay? I'm not saying it has to unfold to this degree into the remainder of the week, but again, when everything is green, if you've got to start selling something, obviously it could spur a little bit of a pullback, right? If you've got to sell something, you got to take a little bit of profit from the rally you saw the prior day, it's going to spur a little bit of a pullback. So again, concerns with the sectors all closing green and big degrees of correlation into the close here in our advanced decline line. Let's get into, and again, if I threw you for a loop and you are not sure what you're looking at here, I do have a video, top right-hand corner is going to describe what this is, how you can set it up, and how it'll help you become a better intraday trader. And then also, moving along, we've got yet again another video for you. So once you watch the one on the internals, you can watch this one on the market profile, again, linked up in the top right-hand corner. But the main takeaway here is that spike that I was just referring to at the 420 level on the SPY itself. Notice this area, we essentially have what we call single prints here in market lingo, where there's very thin structure on the way up. So if a pullback does start to develop here, this is why, again, there's basically nothing that's stopping us until we get into that SPY levels. It would be 421 and then 420, right? So those are the two levels we identified on the SPY, and you can see how that makes sense here on the market profile as well. It's 422.50, right? So there we go. Catching myself in my head. So nonetheless, bottom end of single prints here closer to, if we just zoom in on this so I can get you the exact number, that way you've got it. Let's go ahead and say single prints are going to begin at 42.08 even, okay? So anything above 42.08 technically keeps the market in the spike, keeps the possibility for two-sided back and forth trade alive in here. If we fall back down underneath, that gets into that scenario I was discussing where all of these people are longs, late to the party, terrible location, high likelihood that they close out. We at least go to the prior day's low, point of control. You would look for lower if we give up the base of the spike, essentially based on, again, trapped longs who got overly long into the FOMC announcement. That's really the main market profile reference I wanted to discuss in today's video. So let's bring it back on over to the platform here, and we'll round out the broad market with our QQQ. This one, just like the SPY, is sitting right at the upper edge of the expected move on the week, right at resistance as well. You can see that level is 3 329.50. Breakouts here are a little bit different than the SPY because we clearly have this shelf of prior support to contend with as well. Remember, in the SPY, this kind of is that level, right? So nonetheless, that's 335 to the upside, and then your daily 50 SMA. This one has a ways to go before it even gets close to that daily resistance trendline, remembering that there has been some relative weakness in the tech sector for quite some time as rates have been rising. Anything that remains in this box, in my estimation, it's kind of like an all bets off kind of thing, noting that there's just a lot of volatility in here, not necessarily a whole ton of direction. If you are a contrary trader, shout out to contrary trader in the Discord, but hey, not talking about you particularly, but if that's your sort of style of trading, then I wouldn't call you crazy for looking for shorts here for a mean reversion type trade with a tight stop just over the highs, right? That could be a reasonable trade if we see the pullback, which we're kind of expecting based on everything being so correlated to the green as of the close on today's session. So that could be a trade to the downside, and you're probably not overstaying your welcome. Just like in the SPY, we have 322.50 as your last line of defense on the smaller time frames. Zooming in here, that's also going to coincide perfectly with the spike, right? So basically, without even going over to the market profile, you're just looking at 30-minute bars that are not overlapping, and that's going to be from in here. Notice that we have the red doji. It's overlapping with the big green bar in here. So again, your spike base and prior daily structure, intraday structure is 322.50, just like in the S&P. Anything that does this, it's not so much an inverted head and shoulders look, but it is kind of that rounded bottom look, and this obviously turns into a neckline at that 329.50. So that's your bullish look, something that does this, and then failing underneath that level, obviously you're looking for lower, back down closer to that 311.17, the lows from on Monday, right? So that's what we've got in the QQQ. And also, I would point this out. The last time we had an FOMC announcement, obviously that was closer to in here, the market really rallied for quite a sustained period of time. I'm not saying that it's going to do the same thing, but, you know, I do think that we can have a little bit more of a bullish slant looking for maybe that consolidation. Again, don't get me wrong, pull back first, but then some sort of break of this could get interesting for maybe something that doesn't exactly mirror this to the T, but we see a little bit of follow through here, not just one day of breakout and a stuff right back down to the downside. Next up, we've got IWM Russell 2000 and the small caps. What do we see here? You can clearly see right at the back test of the breakdown point. So are we going to get a break retest and then move back lower is the question that you're trying to answer. 193.50 is your level. If we break it on down to the smaller time frames here, again, perfect. We do not need to adjust the level like we did in the SPY. Your single prints and essentially that intraday pivot point that we've been monitoring is 189.50. Any pullbacks that do this, again, more of that rounded bottom type look like we just discussed in the QQQ, not necessarily a clear inverted head and shoulders, but your neckline, obviously, that level we just discussed, 193.50. Underneath 189.50s gives up the spike. Again, poor location for these longs. I would expect a rotation into that 184.50. And if we just go back on out to the daily time frame, that's obviously the bottom end of support in here. Kind of a must-hold area if we're going to remain bullish on IWM for the larger term short. Right? Boom. If we break that, that's where you're looking for follow through. And this is nothing more than just a lower high, right? So that's what I've got for you in our broad market. Let's start moving through our core list of companies here. Apple, big rebound on today's session, but has it really done anything to impress me one way or another? Not really. Remember from the weekly watch this video, I sort of said that this box in here is just a nasty volatility range. We don't really have too much structure to be trading off of. We're currently out of it to the upside, but we have to contend with that resistance trend line, the 50 SMA and this horizontal level. We're kind of sitting right at a conglomerate of resistance. Again, if we do get some sort of pullback, higher lows, and then breaks of this, that to me is the much better long entry here inside of Apple. So any pullbacks that give us the higher low, look for your resistance trend line to break. Your next major target overhead is going to be that 171. That's really the trade that I would watch out for here inside of Apple. And to the downside, if we do just come back down into this box, I'm sort of hands off in there. I mean, day trade's fine, absolutely scalping 5-minute flags, 5-minute flush points, all that stuff is valid. But from a daily / semi-swing perspective, I've got nothing to tell you, right? If we come back down into this range right there. Netflix is up next. This one, I think, is only interesting on the back test of the 210. Sure, we have this consolidation. Technically, we have higher lows as well. There could be a bit of a breakout that unfolds to that level. But for me, just based on all the selling that's been taking place, place, I want to watch for the reaction at 210.75 and say, okay, if we see any intraday double tops, head and shoulders, whatever, that's where I'm looking for a short. I'm not looking to short this, at the top of the range here. I want to see if we get here, okay, then we can sort of look for rollover. And my target would probably be something that does this back to the lows in here, closer to one, I don't know, let's just hover the cursor, see what that is. First target would probably be roughly 190, okay? So that's my sort of idea here in Netflix. I wouldn't be looking for longs in Netflix, as we've pointed out, until we can cross back above that 228.13. I really don't think it's worth taking the risk for something that does this over the course of time until we can prove ourselves, right? If it wants to do this and give us a higher low, fine, that's a setup for the future, but the current look is clearly a bear flag, and underneath 210.75, we're looking for shorts. Next up, we have Tesla, wild card here. Breaking out of the flag that was down here, right, to the upside. And we've also closed technically above 945. Boom, right there. That's that breakout level from in the past, led to that nice move in there. I think the big thing to watch out for here, and because the ranges are so large in Tesla, obviously you have plenty of day trades here for short-term holds. You're looking for that back test of the big flush point at 978.50, right? Any intraday patterns that form that look even remotely bullish, like 5-minute bull flags, whatever, that still leave enough meat on the bone, that's probably the intraday trades that I'm watching for into the remainder of the week. And then I'm seriously reevaluating once we get here, taking off, if I've got some kind of bullish structure on 3/4 of that trade, monitoring for continuation on the last, but being, certainly open to the idea that we could stuff here on the back test of this critical flush point, right? And do something like this back down into the range. So that's really my main watch and concern into the remainder of the week here on Tesla. The current look is bullish, sort of getting out of its own way in here. We also have the tailwind of sort of, Elon Musk coming out and saying, all right, I'm done selling Tesla shares. Obviously, the market liked that as we moved into the earlier stages of this week. Next up, we have AMD. Big move here. It was up, it was down, and then it was back up into the close here from earnings. So gapped up on earnings, filled the gap. So a good thing from a structural perspective. And right now we're sitting right on the back test of that 100 level. So this one's also kind of in a patience mode right now, noting that we could clearly get something that looks like this for the break retest and then back lower, or we could start to recapture that. And for me, the fact that this filled the gap and then closed back strong up towards the highs is giving me a little bit more confidence to look for the bullish trade here back above 100 in AMD. I would love to see something that does this. If we can form a higher low above that 100 point, I would sort of start looking for structures that target the daily resistance trend line, which depending on when that ultimately happens, could be anywhere from, let's just eyeball up to 110 to 105, right? So that would be my current look in AMD. I like how we did fill that gap. The buyers really stepped back up and it was back higher. We do not obviously have a spike to contend with here, noting that we have the early morning structure that was lower and then back higher. So there's no real poor structure from that spike perspective that we're getting into with the S&Ps and the broad market, right? Facebook is up next. What do we see in Facebook? Nice continuation play up and over that 210. We're back above sort of that key resistance from in here when we were dealing with this flag, that 217, strong daily close above. Looks like it's reaching for that 231.50. That's also going to coincide with very, not slightly, but loosely rather, with some of the prior structure here, right? Support and then resistance for that first major lower high after the earnings gap down. So that would be a big level that needs to be recaptured. Any higher lows, again, starting to look for something like that. For those of you who are still not convinced that Facebook is a long, you're still just being patient for the larger gap to fill overhead from that prior earnings cycle. To the downside, if it pulls back, ultimately your line in the sand wants to be this 210, at least into the remainder of the week. Ooh, excuse me there. And as long as we're above that, there's your higher low. If we do start falling underneath, maybe it's a revisit to the top of the gap underneath at 193. Again, the way that today closed, it wouldn't be my first thought to go back to 193. But again, just use 210 as sort of that line in the sand. Above it, ultimately target that 231.50 and underneath top of the gap. Next up, we have NVIDIA. What's going on in NVIDIA? Breaking out of a balance to the upside here. Again, the look is, can we come for the back test here of the flush point at 209? And what is the reaction there? So because it's day one of the breakout, because we saw a wick lower and we closed back higher, I would be willing to look for longs into the end of the week that back test 209, but then I would reevaluate the position. Just like what was it that we talked about in Tesla, I would probably take off any bullish structure structures that I have in like a 3-quarter ratio, monitor for continuation on the last quarter, and then say, okay, if it stops us out, fine. We know that it's just a big daily lower high, something that does this, right? And then we're looking for rotation back down here on a look above and fail type of trade. Entry is back down underneath that 199 for the short into 185 quarter, right? From there, you would monitor for continuation lower. So there's all types of ways that you can start to look at these structures, but I do like the fact that, again, it closed solidly after putting in a decent little lower wick here on today's session, back above the multi-day balance that we've been stuck in. The target into the end of the week would be, again, up here closer to your 209. If the market just chops around and goes sideways again, because we did mention all of the green that we saw, all the correlation, anything that holds up above 200 does turn into a structure that you can look for longs out of, noting that, again, we're sort of trying to make steps in the forward and upward direction. So that would be my ideas here inside of NVIDIA. Next up, Microsoft. What do we have here? This one hasn't moved. This one, again, is pretty difficult to trade as of right now. We did come right into this prior area of structure. So I would say looking for longs based on what's unfolded here. We supported at the bottom end here. Technically, you could start to call this, right? Inverted head and shoulders. Your neckline's up around this area, 291, 293. We know that the big long, well, not big, but the more obvious long trade is for the gap to fill up towards 296 quarter. That's mainly my priority into the remainder of the week. Monitor for continuation after that. If it stuffs here, again, wouldn't be my first thought to trade it through this really sloppy range. It's been pretty tough unless you're just scalping it, for a quick 5-minute bull flag, 5-minute breakout point. We called a good one today, up and over that 284 for the long here. Nonetheless, it's choppy in here. There's really only short day time frame stuff we can discuss, not big overall market pivots. Next and lastly, we've got Amazon. Before we get into the 3 trade ideas, what I want to point out about this one is the multiple hammer candles that are forming down here at the lows. Notice that all of them did produce significant lower wicks, and all of those daily closes were above the close and low of the earnings gap down day that was around 24.32. So this does have the look to me that if we can take out these 2-day highs, we're probably moving to the bottom end of the gap at 26.14. And after that, we know our target is here at 27.17. So I like the bottoming sort of activity that's starting to unfold here. Obviously, a concern would be if we can't take out the 2-day highs, it's probably chop through here, builds out as, again, a significant bearish pattern here with the trend clearly being down. The next better short is underneath the lows there, closer to 2400. But again, based on the current look, doesn't seem like it's a likely possibility into the remainder of the week. Instead, I would watch for the 2-day high break. Again, bottom of the gap is your target, 26.14. Let's get into these trade ideas. The first one I've got for you is on XOM for ExxonMobil. What do we see here? Big breakout of our flag or ascending triangle, whatever you want to call it, right? We did identify, of course, that energy is back on the move to the upside. So the idea here would be any pullbacks that hold the breakout point for something that does that is a decent long setup for a break and retest. Your number is 88.85, or if we just see immediate continuation, taking out today's high, look for follow through essentially to the upside. We're moving into, I believe it's uncharted territories. Maybe we've got something from a long, long time ago. Tends to be that way with some of these energy companies. Let's just grab a bunch of time on a weekly. Yeah, of course. So the next target would really be closer to 95. And then after that, we do have, what do we have? Wow, 100 doesn't really strike me as a psychological area from the chart, but really closer to that 104. That would truly be closer to an all-time high, right? So 95 could be a target into the end of the week here inside of XOM based on this breakout here. Wouldn't be asking for terribly much, noting that the range on some of these really positive days here can certainly travel some distance like that. So watch for follow-through, or if it does pull back, make sure that we stay above that 88.85 for longs. So enough of that. Energy sector's obviously on fire, no pun intended. Next one is WFC for Wells Fargo. And this one could be played either way. We know that there are a lot of break and retests happening out there. This is certainly one of them. So break, retest. If we see any weakness around this area tomorrow, it's probably due or at least reasonable to think, okay, maybe we get a little bit of a scalp day trade for lower. What would be your target in a case like this? Well, we might have to search on the 30-minute time frame, but this strikes me as something reasonable. And the range here isn't really that large, so you'd probably have to take a considerable amount of contracts if you're trading options here. So 45 quarter could potentially be that target. Let's grab the other tool, map that in, and then we'll look at it on the 30-minute time frame just to see if that aligns with any spike activity that we saw today. And would you look at that? Pretty darn close, right? So you could see that was where I was grabbing that from the daily time frame. Your spike is technically to 45 here in Wells Fargo. So anything that really fails up around this 46 quarter, you've got about $1.25 short to the downside before I would start looking to aggressively start taking off some of those contracts, booking some profit, right? If it wants to just continue above and form a higher higher low above, obviously it's a no touch to the short side. Next up, after this WFC, we've got SQ, so banking, but in the digital space, right? Or transacting payments, whatever you want to call it. Nonetheless, bouncing out of this bottom of support, and I think, yep, we're on the 30-minute time frame. So let's go back up to the daily. There we go. Here we go. So bear flags in play. I like how we had a look below and fail here, and now we're sitting right at sort of the top end of the range. And we do have earnings coming up around the corner, so be mindful of that. But I do think that if this can start to get some traction above 107.14, look left. I mean, pretty thin structure here until we come to the flush point in the daily 50 SMA, much closer to 118.50s, 120, that general area. And again, with the lower wick that did technically run stops underneath the bottom end of this balance, I like the relatively strong close up at the highs of the overall range. When are earnings on this thing, by the way? It looks like they are after the bell on tomorrow's session. So for a day trade, this could be a long through this range. I'm not saying it gets all the way to here on tomorrow's session. Obviously, you wouldn't want to hold short duration options that are expiring on Friday through the earnings call. But nonetheless, I like the look of this chart for a potential move up and over that resistance at 107.14. So that's going to wrap up the video. If you enjoyed it today or learned anything new, let me know in the comments section or by giving the video a thumbs up. Don't forget our secondary channel is linked down below in the description. We haven't been too active there, but I do imagine that will start to pick up over the next, I would say maybe 2 or 3 weeks. Nonetheless, updates will come. And also, I've got an interesting request. If you've made it to the end of the video, let me know if you know anyone who is a fantastic t-shirt designer. I'm looking to have a couple of designs made up for t-shirts. If you know someone, please join the Discord. It's linked down below in the description, and send me a direct message of their portfolio, their credentials, their contacts, some way I can get in touch with them and start talking about ideas. I've got something special planned as we come into that 25,000 subscriber milestone. So nonetheless, that's going to wrap up the video. Hope you enjoyed it. I wish you all a green trading week.